Are you serious? Are you serious? Folks, let me just say this real quick now. What? It's what a time, what a ride we're on. Let's be honest. America, hang on. I mean, there's reports coming out everywhere today. Deep economic suffering has erupted all over America. But guess who the Federal Reserve is helping? Well, we're going to find out about that. Now, you know the stimulus package that the president has talked about, this $2.3 trillion, I guess today, people are getting stimulus. I've been finding out that, yes, there are people actually getting stimulus money that's showing up in their banks. It's not everybody. It's probably going to stretch out over the next week to 10 days. We'll ask our guest here in just a moment. But one thing I can tell you, gold outlook right now is exactly what we thought would happen. Prices are rising to a new multi-year high, and I don't think it's over. Well, that's what we're going to find out. So let's bring on our guest today to help us understand this crazy world we're in. That is Colin Plume from noblegoldinvestment.com. Colin, it is so good to have you back on the broadcast today. And I know you've been home taking care of children in this shelter in place. How are we doing?
I'm doing great. It's been a blessing to actually spend some more time at home with the kids. I think everybody's just getting to know their family a lot better than they thought. A lot of dirty diapers for me. I'm getting dirty. Basically here up, I'm clean, but down below, I'm putting in work. Daddy's putting in work. So it's
more. Now you've got a really strong appreciation for your wife and what she does, and anyone else that helps the caretaking. You're getting a new appreciation for this.
It's been, it's horrible. Everything that's happening has been horrible. But to stay home and spend more time with family has been the silver lining. I think it's forced us to, bring out some of those board games that have been collecting dust, and I've been, both twins started walking last week.
Oh, congratulations. That's amazing.
I was here to see it, and it was right in the middle of the day, which I never would have been here.
Yeah.
But Sharon called me, and I ran up there, and I got to see it, and so there's a lot of that happening that's been positive, and then I think everybody's just everyone that's healthy is just trying to figure out what the new normal in life is, and to segue back to what you're talking about, the stimulus, and it's good to hear that people are getting that money. That's good. And it seems pretty fast, I think, to get it that quickly, to get that amount of money out to that many people quickly is a good thing. One of the things, and not to go too much on a negative rant, but I will say that in these bailouts, you see things like the airplane, the airlines getting bailed out. And I don't know if people have been looking at that, but before this crisis, the airlines were doing unbelievable buybacks of their own stocks. So basically what they were doing, all the money they had in reserve, they were just buying back their own stock to prop up the value. Now, the airline industry is just one of the industries that was doing this. A lot of them were. But if you look at it, and there's articles about this, and don't take my word for it, basically in the stimulus package, there's $50 billion earmarked for them. $45 billion over the last 18 months of their money was used to buy back their own stock to push the price of stock up. And guess who it benefits the most by that is the shareholders, which is good, but also the executives in those companies. They didn't leave enough cash for something like this, some kind of disaster. So in essence, they're they've been using federal money to prop up their own stock value. Now they're going to use federal money again to bail them out, which is the real big problem when you look at just the big picture of how these things go, is you have all these companies that were taking huge amount of risk, not putting money aside, and now they're just going to get bailed out, whereas the average American's getting, $1,200, let's say, which is really nothing in the grand scheme of things. So the bailouts are good in some ways, and in some ways they're frustrating for me as a business owner to see that these corporations were living too high on the hog, so to speak, and then using this money to get the executives and a lot of people wealthy, and then when things go bad, they just go out and take a handout, and everything gets fixed. So those things are frustrating.
You are exactly right. And I think that's what frustrates the American public when we see that kind of stuff goes on. Another thing was in the small business loan, the small businesses are supposed to be able to get 8 weeks worth of their payroll paid for in a loan that will get forgiven as long as you use it for those employees. The problem is the big chains, the big boys, that own all the, like McDonald's and all the people who own all the multiple locations, they got to qualify for this small business loan per location to pay their payroll in each one of their locations, and they're eating up the money that should have been going to the, to the barbershop and to the nail salon and to the, the little people. So, and that got snuck in at the 11th hour at 1:30 in the morning when the president was asleep. And, that's the kind of stuff. Now they have to go do another stimulus package to pick up another $250 billion to throw into this just to take care of the rest of the restaurant owners and people who are really taking the hit. The market, so what's your thought on it? That's the kind of stuff that bothers people.
Those last minute deals always get thrown in at the end. And that is the frustrating thing, because the regular small business owner, listen, someone that owns a McDonald's is not a small business owner. I'm sorry to say it. Now, if you own, a business like a restaurant and it's you and two other people making the food, that's a small business. McDonald's, you can't even run McDonald's for less than probably 40, 50 employees. Most of those people own multiple locations. So it's hard to see them sort of qualify for that. Also, a lot of them are still in business. Obviously, drive-thrus are
booming,
really going gangbusters. There's I don't know if you know this chain, In-N-Out Burger. I don't know if they're out where you're at, but there's an In-N-Out Burger by us, and literally the line is like 4 miles long. You can't even, you might as well get in line and take a nap by the time you get up to the front. They're doing gangbuster business. So, that is, it's supposed to go to the real person that is self-employed, where they got a few employees, maybe 10 max. And those people are the ones that really need it, because they want to continue to pay their employees, keep their shop open. Otherwise, they're just going to close up shop, which a lot of people are doing.
Folks, this is Colin Plume with us from noblegoldinvestment.com. That's www.noblegoldinvestment.com. And, Colin, we're looking at the market, okay? I said, I'll be honest, I said we're going to hit 30,000. We got to 29.5. And then the coronavirus hits. Today we're sitting around 23.5, somewhere in that, 23.4. We've lost a couple hundred points today. I don't think we get back 6,000 more points the rest of the year. Maybe we do. What do you see in the market? Do you see a bounce back that fast? If we let's say the president allows the governors to open up for business May 1, and maybe 35 states could do that. New York and some of these other guys, they're not going to get to do that. So what do you see happening?
I think in over a week, we may see an uptick, but a quick uptick once things open up, because people will start to go out again. But I think the problem is that how they're going to open up to be safe, to hopefully avoid us having to close down again. It's going to be a very slow opening. And so I think a lot of the big employers aren't going to be able to open the way that they want. I think that there are places where a lot of people need to go, where a lot of employees are. I think those places are they're going to slow that to a point where it's not going to be a full, opening. Like sporting events and these types of places. I can't imagine these ones are going to open up. Who knows if they'll even open up this year? It's hard to gauge, because obviously they're working on some antibody tests. They're working on mass testing, and obviously that would give people more comfort if the more people had been tested, and people that went out there and they knew that a lot of the people going out were tested. But the problem is, when you have so many people so spread out, how are you going to determine who's tested, who's allowed to go where? We don't have this infrastructure in place. So I think my gut is May 15th, we may open up, people will go back to work. but I still think a lot of restaurants and bars I don't know how they're going to open that up safely when you have so many people touching so many things in a restaurant and a bar, from utensils to doorknobs to, I mean, everything in there. It's just constantly being touched. So I don't know how they're going to be able to do that safely. So the only thing I could see is we may see a quick uptick in the markets with just like the enthusiasm of people being like allowed to get out of their house, and there may be some buying out there. But then what'll come back later is that the world that we're living in is never going to be the same in terms of employers, and people are going to be really cautious about who they hire, even though business is sort of open. I don't think people are going to be hiring en masse right now. I think they're going to be cautious, and that's going to slow down the economy. I think this year is going to be really tough, and I actually think that we're going to see a pullback below 20,000 this year. Once things settle, I think we'll have it pull back below 20,000, and then 12 months from now, 13 months from now, I think things will kind of settle back in, and then we'll start to see the markets kind of recover.
Folks, this is Colin Plume with us from noblegoldinvestment.com, noblegoldinvestment.com. You could always pick up the phone and call Colin or one of his staff members at 877-646-5347. That's 877-646-5347. I mean, really, they are a great company. They really want to work with the investors and help their customers during these trying times. As a matter of fact, that's what I think Colin can do right now. If you look at the Dow Jones, like he said, it's down about 6,000 points since the coronavirus hit. Gold, though, surging to now 1732. Silver holding steady. Bitcoin's a little bit below $7,000, and oil is somewhere at a miracle $19. Tell me, what is gold going to do? I mean, it's pretty well at the multi-year high. I mean, Colin, is this?
Yeah, 7.5-year high. I just want to say, too, we are working extended hours. We are now open from 7 a.m. to 6 p.m. Pacific Standard Time, Monday through Thursday, 7 to 5 on Fridays, and we're open from 8 to 12 on Saturdays. We are open extended hours for people that do want to call in and have questions. We are available. We've extended. Everybody here is working on double shifts, including all the shipping department. We are shipping basically 7 days a week right now to get out metals as quickly as possible to everybody. So we are here if people have questions. You know, it's hard to gauge with the markets. I will tell you a few things in the metals market to keep in mind. A lot of the mining companies have basically come to a halt. Platinum, which is a byproduct of some other mining, has the mining of that has really slowed down. There's going to be a shortage. Gold, we're looking at some shortages. And for anyone that knows metals, silver has been very difficult to get. We do have silver and gold and platinum inventory right now. But the mining companies have slowed down. The Royal Canadian Mint, which is the second biggest supplier of coins here in the U.S., has been closed since this virus over the last few weeks. So that's a big company that's just been shut down, and who knows when they'll open back up. So a lot of your typical players that are, finding metal and creating metal and coins and bars are not doing so at either at full capacity or at all right now. So that has definitely pushed the price of metals right now. I think that the Fed is going to go on a spending spree. I think we're going to go on a massive spending spree. I think that quantitative easing is going to be around for the next 2 to 3 years. It's going to be just like 2008 to 2011. I think we're going to see the same thing, and they're going to open things up and really spend money. Good highlights of, and I will say this, and even though I'm a metals person, I will tell you, bear markets typically are very short. I think this one will be a little longer. I think we're looking at another 12 to 13 months of struggle. But I think eventually the markets, we figure things out here in the U.S. and things will figure itself out. But I think gold and silver are going to be a really strong asset for hedge funds, for central banks, investors. I think everyone that is in the know is going to be diving into metals. I think we're going to see some really strong growth.
So is this, Colin, a time for people to buy gold and silver?
I hate to be a predictor of things, but it's hard for me to think that gold won't break 2,000. It's really difficult based on what we're seeing, the trends, the buying, the demand, I think it's pretty safe. Silver breaking $20 an ounce, I think, is very conservative. I just think we're going to hit those numbers right now because inflation. It's just inflate. They're printing money. They're going to inflate everything. Everything's going to get more expensive. Food cost is going to go up dramatically. Food cost is going to go up. And I think you're just going to see inflation across the board, and gold is going to take advantage of that. And then I think the other things to look at is just on the positive side is the United States, is that after 2008, places in the United States became travel hotspots. So basically, people didn't have money to go to Europe, Hawaii, or wherever they were going to go. They wanted to go locally. And so what's going to happen is people are going to start staying local and start going to places near their home and take vacation. And they're going to really sort of hunker down here in the U.S. And that's going to be fantastic. It's going to be great for business. It takes some time. Goods that were made in China are going to start to get made here. And that was the main reason I thought we were going to have this pullback. It's just all the slowdown in goods coming over from China. You're going to have a trickle-down effect of all those things happening. I think people even more so now are going to look to buy U.S. They're going to want to get away from goods made overseas. They're going to be willing to pay a little bit more if they can get it made here in places that they know. So I think the ultimate good is that people will start getting back to buying U.S., traveling U.S., and I think eventually that will be good. It's just that in the short term, those things are not cheap to do. Building industries here, building manufacturing, traveling, it costs a little bit more, but ultimately, in the end, the U.S. is going to be much stronger for it.
I think that's right, Colin. And folks, listen, I really do. I think you hit the nail on the head. People are going to stay closer to home now, not travel abroad. They're not going to travel abroad for a lot of reasons. One, they may not have the money to do it. Number two, they just don't trust the airline industry. I think they're going to drive a lot more, which is, and they're going to stay home. They're going to be, go camping. Disney's going to really have a bad year. And then in the stadiums, I think that the Major League Baseball is going to have a really, very quiet year. Now, things settle down. Maybe the basketball season and football season next fall, college football, maybe it picks back up. Everybody feels better if the numbers of the coronavirus goes down and everybody gets more comfortable. But I think you're right. And I think that the price of gold and silver has got to go up for two reasons. The mine's if they're not mining the gold, it's going to be a shortage of the metal itself. And number two, the quantum easing, that's really going to mess stuff up at some point. But then you got the market. It don't know what it wants to do. We got to get Main Street back to work. I mean, you got to get people back to work, spending money for real goods and services. And I think Trump, you have to agree with me, I think you would agree that Trump's plan was to bring manufacturing back. He was been doing that with the tariff thing on China. But now it's just going to be naturally they're coming back just because we can't deal with this overseas trade, can we?
Absolutely, yeah, and the other thing that's scary is really the real estate bubble. That's you're talking about the residential bubble and then the commercial bubble. That's going to be something that we're really going to need to look out for, because I think you look at millennials, people in their that were starting to get out and buy houses. And they were stretching. I mean, let's be honest. Like, if anybody is starting a career 5-6 years and was able to, put enough money down to buy a house, if they got laid off because they're early in their career, which, I mean, that's normal. Early in your career, you're a little bit more dispensable for a company. I think that's the thing that's going to make this recovery really tough, is because you had housing prices at an all-time high. You had commercial real estate. You're looking at shopping centers were already having issues. Office buildings were already having some problems. And there's a lot of companies that are they're not going to be in a big building anymore. They're going to walk away. They're going to have people work from home. So I think there's a lot of space out there that's going to go vacant. And that's going to cause a lot of problems. I think we're going to see a lot of bank foreclosures coming this year. I think a lot of that's going to happen and hit the real estate market, unfortunately. And I think people are just going to be conservative with spending. Companies are going to be conservative. and they're going to shift. And the great thing about this country is, I talk about metals, and a lot of times I've been worried about a lot of these things that are happening. But I do believe this is the greatest country in the world for a number of reasons. But the biggest one is ingenuity. I think that people are very ingenious here in terms of figuring out ways to make money and careers and business, and it'll just take some time for us to figure that out. But right now, real estate, I'm very concerned about commercial real estate. I have lots of friends in that industry, and basically it's come to an absolute halt. And they think that nothing's going to happen, probably for the next 6 to 10 months, and that's going to cause a lot of problems.
Also, Colin, I think you again, go to noblegoldinvestment.com, folks. Colin Plume's with us at noblegoldinvestments.com. Pick up the phone and call Colin or one of his staff members. Like he said, they're putting in extra hours now. 877-646-5347. That's 877-646-5347. Colin, people have got to be worried about their 401k and their IRAs. And can they transfer some of their 401k into metals? Can they do that while still working under the age of 59 and a half?
Well, the only, and I hate to look at someone getting laid off as a positive, but I have had a few people that contacted us last year, and they were working at a company, and they found out they could not move their 401k, and now that they got laid off, they found out that they can move their 401k into metals. So I think the only silver lining is if once you leave an employer, regardless of age, you can move that 401k into a self-directed IRA. You can put precious metals in it. That's what we do. But also, you can move it into any investment that you want that's allowed within the IRA vehicle, which means you could roll it over and you could buy a rental property, or you could roll it over and you could buy one Tesla stock. There's a lot of things that people aren't aware of. You don't have to stay in mutual funds once you have access to that money. So whether you're going to put it into a self-directed IRA with us, which we can help you with and we can do the paperwork, or you just want to get control of your money, it's a great time to do it. Because what happens is a lot of people, what they do is they leave an employer, they move that self-directed IRA into metals with us, then they start a new job, and that new job, they start investing, and that's in the stock market. So you have your metals account, and then you got your stock market account. So they got two. So they got that diversification, which is what everybody wants, and which is really the key to long-term investing. So this situation, if you got laid off and you want to move it into metals, this is the time to do it, and you do have access to that money, regardless of your age.
Question for you. Wow. Bernie's gone. Socialism is dead now. That's not going to happen, which we knew it wasn't anyway. But now we're down to this weird situation. We got Joe Biden and a coronavirus, and nobody's holding any speeches or rallies. And the president, who had the greatest economy in the history of the nation, staring at a pandemic. I mean, how do you see this thing play out in the fall?
I think it's going to be tough. I really do. I mean, I think it really just depends on, and this is sort of, in my opinion, it's sort of out of his control. But I really think what it comes down to is, can they find some type of legitimate cure? If they can find a legitimate cure where people can start going back out again, and feel comfortable going back out, and that's obviously, he can't control this, but if they can find something that is stopping it, and obviously everyone's read these reports of all these things that they're trying, but if they can find something, then I think there's a chance that we could be on a level playing field in terms of where the election goes. If not, I think it's going to be hard to think about what's going to happen. I don't know exactly, but it's going to be, having an election, if things are the way they are today, is going to be something we've never seen, because polling, everyone that's gone to vote knows, I mean, there's a lot of people there. There's no way to be 6 feet apart. So it's, I don't know how they're going to fix that. And I don't know if we're going to go to remote voting, which a lot of people have talked about, but obviously there's fear of fraud if that happens. So it's tough to gauge where things are going to go.
And what about the fact that people look? They're dumping the milk. The farmers, they got to pour the milk out. I just saw where thousands and thousands and thousands of acres of onions and stuff just being thrown away. Milk's being thrown away. Eggs are being thrown away. And so I pulled up to this one Taco Bell this morning, and I wanted to get a breakfast, just something little thing for breakfast, just because I was in a hurry this morning. And the guy said, "Sorry, we're no more breakfast." I said, "Why?" "Due to coronavirus." I go, "Well, what does the coronavirus got to do whether or not you can fry an egg?" He said, "They're hard to get a hold of now." Why are they hard to get a hold of? What's going on, Colin? And then the governor of Michigan said no more selling seed. They're not selling, they won't let people buy seed to plant a garden. Why can't people plant a garden? What does that got to do with coronavirus?
That doesn't make any sense to me. I don't understand. I think
doing?
The problem is that without knowing exactly how this is contracted in terms of what's safe and what's not, it's just everyone's just guessing about what to do and what not to do. I mean, that's really what it comes down to, and I think that's why it's a scary environment for everybody, because I would say in terms of eggs, my guess is that people are just buying a ton of eggs, because if everything really goes bad, eggs stay good that's the protein that stays okay for a long time. And so one of the proteins that stays good for a long time. So I think that's probably people are, in a 4-person household, they probably have 100 eggs sitting there when they don't eat 100 eggs. And I think that's probably a big part of the problem. Ultimately, these restaurants not serving continuously, I think what I've been reading is it comes down to a lot of these restaurants, maybe not Taco Bell, but a lot of these, they need people to sit, they need people in their seats, they need people there. And the way that it's being run right now with just drive-through, there's just not enough income coming in, and they're just starting to see a virtual kind of slowdown. And I think a lot of people are probably cooking at home and not going out, not trusting any kind of delivery, which is also kind of a double whammy for that industry, unfortunately. So, where things are going to go, that's like what I was saying, is I just think this opening is going to be so slow, and that's why on the financial front, you can't put any money, you can't invest, you can't feel comfortable when there's no strong footing out. Everything is very unpredictable right now. But I think that when you see the large money moving into metals, it does give you a little bit more comfort. And it's always had a